I'm making this video to share my US dollar index analysis with you. So let's go to the chart of US dollar index, and I've identified something which I'm going to share with you. I've seen that all stocks, all important stocks, all significant stocks from of the USA are rising, and they have been significantly rising to the upside with a great acceleration since beginning of October. Few years ago, the correlation between US dollar and US stocks was inverse proportional to each other. When money used to flow between US stocks and US dollar domestically, but situation had changed. All over the world is now the people from all over the world are now investing in US stocks. So whenever they buy stocks, the money flows from all over the world to the US, and they invest money in the stocks. So not only US stocks rise, but also US dollar rise at the same time, simultaneously, you can say. So, and whenever they withdraw money from the stocks, most of the hedge funds, mutual fund across the globe withdraw money at the end of month. So you will see that some money again flows out of the US from the stocks, and it goes to different investment companies, back to different investment companies to pay back to the investors. And that is when you will say that money, since money flows out of the US dollar falls. And this has been the nature ever since October. So I'm trying to make you understand the chronology of the things. The stocks are rising since October, and the same, and then people are investing in the stocks. People are taking money at the end of month. Companies are taking money at the end of month, and dollar falls at the end of month. Then again money comes in, and then again dollar rises. So look at what is happening since October here. So if we look at the end of October, this was the last week of October. So at the end of October, if you see, this was end of October, US dollar fell down from this almost from 97.9 to this area. Again, if we look at the end of November, this was the end of November. End of November, very significant fall, because stocks had reached almost a very new high, and then more people withdrew money, more people closed their closed their investments from the stock. They withdrew money, and money went out of the US. So that was a loss for US dollar. Same thing you can see at the end of December. This was the end of December, 27 December, 30th December, dollar fell down. Same thing happened at the end of January. This was the end of January, dollar fell down. So I have seen that the money goes out at the end of the month and dollar falls. So what we have seen in last 4 months, at the end of October, end of November, end of December, and end of January, can again take place at the end of February. And dollar has already reached very significant resistance zone. It has crossed the previous resistance area, 99 point something, almost trading around 100. High is 99.88. All dollar currency pairs are heavily oversold. If you look at like Euro USD, or USD, and ZD USD, so there is a chance of correction in dollar index, and that is why we will see some effect on all the pairs. So now, after having seen this nature of flow in and flow out from the US economy, having seen this nature of US index that says that it falls at the end of month, let's see what we can do on currency pairs. So now let's talk about Euro USD first. Same behavior you can notice on the Euro USD. Euro USD rises at the end of month. In all last 4 months, the same kind of behavior has been seen. So now let's look at the weekly time frame, and let's look at some technicals first. So this bearish cartel which I had identified at the beginning of this year has really worked well, and price has fallen with greater acceleration than expected. So initially we were expecting some retracement after completion of this A, B, C, D 100 in this area, but market had just shown a minor retracement, a minor pullback in form of this candle, and this made a wick to the upside, very minor wick, reached here and again went to sideways. Next day was a sideways action and fell down. So we have some hope right now from where we can expect some upward retracement, and that hope is this point. Look, 78.6 WFIB support. It's 78.6% weekly Fibonacci support against this movement, this upward swing. So if you look at this upward swing, this line is 78.6, and another line was 127.2% extension of this whole move up from this to this point. That is why I had drawn this shaded area between this 78.6% of this upward move and 127.2 of this upward retracement, and this was the support zone. And from here market seems to be taking support. If we look at the daily time frame, you will find that the market is trading around here for third day. So when dollar index will retrace back to the downside, there is a high chance that market will go up from here. This is the one point. Second point is this faster movement to the downside has made a ground of trading Dinapoli directional pattern. So you can expect some movement to the upside, maybe minor retracement to the 30% of this whole thrust. This is the thrust, very fast speed. So it can go 30%, then again it come back to 61.8% of recent upward move, if upward move will take place, or it can make a double repo pattern and market can go to this 50%, because the classical target of double repo is 50% of the thrust, and this is the thrust from this point to this point. So these are two possible scenarios. So if you are in buy position and you are looking for a way to exit, I would suggest to exit at this 30%, the nearest resistance, because if we don't know what is going to happen, market may go to a little upside at the end of month and may continue falling. If we look at the fall that happened during April and May in 2018, you will be surprised that it was a great fall. You see, this was a great fall of like 900 pips. There was a very minor retracement, and it was from, if you calculate from this to this point, this small retracement to the upside was kind of 170 something pips, and it was just 28-29% of the whole move down, which is why I'm not suggesting more than 30% upward retracement. Market may move to the upside more than 30%, more than 38.2%, or maybe more than 50%, who knows. But we have to take the precautionary measure, because if something like April and May 2018 is going to happen, then you have to be very careful. So if retracement to the upside will take place, we'll be rather looking for an opportunity to enter sell position. So this retracement to the upside is suggested just to look for the opportunity. We will be looking for the candle pattern on 4-hour time frame, or maybe on daily time frame around these areas, and further we will see what happens, whether or not we get a bearish candle pattern. If we get the bearish candle pattern, then we will target this another target, which is this A B equal CD. So this A B CD WFE 100 Fibonacci, weekly Fibonacci extension 100, that area is around 1.07. so this will be the next destination, and market can repeat the history of April and May 2018. Now you see, this was the faster fall, market was in slow movement, but now again it has accelerated, and it is now moving similarly faster, like it had moved between April and May 2018. So maybe this area can be reached 1.072 1.07. This is 1.0703 precisely. So roughly 1.07, that is also a round number. So that is the plan for Euro USD. And if we look at the GBP USD, I tell you what is the plan. GBP USD right now at 61.8% extension of this smaller ABCD, that is Fibonacci 61.8%. There was a bigger ABCD, that is why I have named it BFE, bigger Fibonacci extension 61.8, which was extension of this downward fall from this to this point. Market retraced to the upside, and very slow action was there, and then market finally had reached this BFE 61.8, and next target can be BFE 100. So this will be the next support area. Let me make a rectangle in this area. This will be the next support. But before we reach here, we are gonna see the end of February, where some dollar will be taken out of the US economy, US stocks. So definitely we can expect some upward movement from here. This is the one. Another reason is the behavior of GBP USD. Unlike the faster downswing on Euro USD, GBP USD has been moving in a range, very tight range in this Bollinger Band. So we can expect upward swing from this, this lower band of the Bollinger. So this recent ABCD 61.8 is coinciding with the lower Bollinger, from where we can see some upward movement. So we have just exited our sell position right now. We had targeted this area, and while I'm making video, our sell position has just reached our take profit. One thing is irrational in GBP USD though, and that thing is behavior of the market. Recently market, GBP USD ignored positive CPI. Yesterday positive CPI just caused a minor action of like 50 pips to the upside, and market started falling again. Today it made a weak, just a minor reaction of 27-25 pips, and again started falling. So it looks like GBP is behaving irrationally. It's not giving any it's not paying any hit to the economic data. But overall technical scenario is still saying that this movement is not very fast. It is not similar like the downward faster movement of Euro USD, which is why we can expect again a movement back to the mid band of Bollinger. So that is our plan. We can just look for any opportunity on 4-hour time frame, and when you find any bullish candle, you can take a buy position. And now we are not going to consider this Bollinger Band on 4-hour time frame, because it's working better nowadays on daily time frame. So we will use this 4-hour time frame just for candle pattern. All recent candles on this 4-hour time frame has been working well, and after candle, if you enter the position, you will have enough opportunity to move your stop loss to the break-even point. For example, if you look at here we had entered buy position, market had gone up but it started falling, so the position was closer at the break-even, because market had moved almost like 50 pips, but it had not reached our target, but we had moved our stops to the break-even. Again market fell down and made a bullish hammer here. This candle was a bullish hammer, and there was an upward movement. So when we get a significant pattern like this, either hammer, maybe morning star or something, we can enter buy position, and we will close the position at the mid band. Wherever will be the mid band, whenever it will touch the mid band, simply manually exit. There should be no take profit, and we should look for the band, because band will be going like this, or maybe band will change direction to the upside, slightly upward. Whatever it happens, we have to look at the band and we have to exit the position, because maybe after next smaller upswing, again GBP USD will continue and will fall down to this area, which is between 61.8% of daily Fibonacci support. This from this to this point, this is the 61.8% support. This recent ABCD 100 is here, and this bigger Fibonacci extension, this AB equal CD is here. So next destination will be something between 27.28 and 26.70. So this will be a kind of 58.60 range in which GBP USD will reach next. But before reaching here, we can expect a minor upswing here, at least to the mid band of Bollinger. That is the plan. So this is all all in the consensus. This is all in agreement with what we have seen in the stock market, what we have seen on the dollar index, and what we have seen on GBP USD behavior in terms of its up and down swings on daily time frame. So that's about the GBP USD. Now let's look at the AUD USD. AUD USD, after reaching this target of head and shoulder, this was the head and shoulder, shoulder, head, and this was the neckline of head and shoulder, this trend line kind of line, but this is the neckline of head and shoulder, and this area, the shaded area, was the target. So market had reached here, first reaction, again reached here, second reaction, but none of these reactions were significant enough. We targeted 30%, but market fell down and we had to exit position at break-even point. It did not even touch 30% of this whole move down. So this is the point I am trying to make here. Yes, so minimum retracement 30%. If from this to this point, yes, sorry. I mean to say that the minimum retracement of 30% had taken place, market fell down, again 30% had taken place, market fell down, and now again we can see an upward move, and the story here will be the same. Money will flow out of the US economy from the US stocks at the end of month, and that will cause a little upward move, and again we can see a similar swing to the upside, just like this swing. Every new swing is smaller than the previous swing. So maybe previous swing was like it was 96 pips, then the new swing was 88 only. Maybe this time we'll see something like 70 pips or something, 70-80 pips, but there will be a minor upswing. So this is the one thing. Another thing which we can see technically on weekly time frame of AUD USD. Before I talk about weekly time frame, I have to go back and tell you one thing, which is reaction to what we recently posted in AUD USD. We had said that if MACD will make a new low, there will be no hope for bulls. So obviously MACD, now there was a divergence. If we see like low and lower low and lower low, but MACD was making low, higher low, and higher low. And if MACD made a lower low below this low, then this divergence is no longer valid. That's why there is no hope for bulls. So longer term picture obviously is bearish, but there is one minor hope that can perhaps cause AUD USD to go back, not right from here, maybe before the end of month. AUD USD will reach this 127.2% for recent retracement. This whole movement on the daily time frame was just a retracement on a bigger picture. This whole movement from this entire movement from this point to this point, this entire movement. Let me just show you here. So this whole movement was just a retracement to the longer term bearish trend. And if you have seen the I think second last or third last analysis, then we had clearly said that this trend line on Australian dollar was broken, and after breaking the trend line, there was huge chance that Australian dollar will keep falling, and that is what had happened. This was the trend line. This was kind of the trend line. Yes. So after break of the neckline here, there was a minor reaction from the trend line when these doji kind of candles were made. So this trend line was broken, and then market had not reacted even from this downtrend line. Generally what happens is market falls down and it reacts from the trend line, but it has gone below this trend line with a very fast candle, very big candle. So obviously overall picture has returned to be bearish once the trend line on the daily was broken, and then market had gone below this falling trend line. So picture obviously is very bearish. So but once we reach here, now we do not have any ABCD kind of target, but once we reach here, there can be some upward movement. So it is technically supporting the idea of upward retracement, and we will use this upward retracement to enter sell again. We will be looking for candle pattern on the 4-hour time frame. After the support retracement, we'll enter a sell position, and then we will further target as per the whatever scenario will be further. Maybe we will get some ABCD kind of pattern or something. So that's all about the dollar index, EUR USD, GBP USD, and AUD USD. Thank you for watching.